On behalf of GISA and its executive committee members, I welcome you all to today's webinar. Friends, after a long time we have JAINEE P. Last year પ્લાન કરેલો ને પછી કોવિડમાં કેન્સલ કરવું પડેલું. So we are happy to have you back, JAINEE P.
Thank you.
તો પ્રણવભાઈએ કીધું એમ અત્યાર સુધીનો 12 મહિનાનો રેકોર્ડ હતો કે જે દિવસ પ્રોગ્રામ હોય 500,000 પોઈન્ટ વધ્યું હોય. We would like to know the height and bus you are back. Friends, JAINEE P, SEBI registered, ઘણા વર્ષોથી એનાલિસિસ ઓફ ધ સ્ટોક માર્કેટ કરે છે. આપણા બધા માટે નવા નથી, તો વધારે સમય ના લેતા I request JAINEE P to formally take over for the evening. Thank you.
Thank you, Samir Bhai. Good evening, President Shri Samir Bhai, Vice President Lieutenant Colonel Shri Hasmukh Bhai, Honorary Secretary Shri Pranav Bhai, Joint Honorary Secretary Shri Amit Bhai and Shri Raj Bhai, and good evening to all of you. Thank you to the Management Committee of GISA for inviting me to this webinar. We had last met in November 2020, and it was the same day that the US presidential election results were announced. We were in the midst of the lockdown due to the first wave of COVID pandemic across India. And even this time when we are meeting, we are required to resort to a webinar. However, at that time, we were not aware of what the future had in store for us during the second wave, which caused large-scale human tragedies in India and across the world. However, in spite of these circumstances, the Sensex and Nifty saw a never-before-seen uptrend during the period between June 2020 and October 2021. In calendar year 2021, the Nifty recorded impressive gains of 24% year-on-year, despite adverse COVID-related challenges. 2021 was a year of heightened activity on multiple fronts. The index rallied strongly until the third quarter of the current financial year, driven by decline in COVID cases, a significant pickup in the pace of vaccination, and the consequent sharp revival in economic activity. However, the detection of Omicron in South Africa and its gradual spread to several other nations, coupled with the possibility of interest rate hikes, led to a 1.5% quarter-on-quarter decline in the Nifty in the fourth quarter of 2021. FII inflows decelerated to $3.8 billion US. However, DIIs, that is domestic institutional investors, bounced back with $12.1 billion inflows after recording outflows in the year 2020. On a lighter note, we have to weigh in so many factors to predict market movements, and now in the mix, we have to add the COVID pandemics and the new variants that keep on emerging every few months. The markets have had a good run for the fourth consecutive week ended January 14th of this year, with the benchmark indices posting 2.5% gains as the earnings season got underway. In the week gone by, the market, which has gained 7.5% in the last 4 weeks, was supported by positive numbers as well as commentary from IT majors, along with favorable global cues. The benchmark Nifty index is up nearly 9.5% from the intraday low of 16,410 in December. The index closed at 17,938 today. If we talk about the Indian economy, with the government ending apex public sector monopolies, the rising share of private sector investments will help the market in holding ground, as past experiences have proved that whichever government sector was opened up to the private sector, none of them have disappointed. Private sector money is expected to flow into power transmission and generation, telecom, warehousing, mining, building natural gas petroleum pipelines, aviation, real estate, ports, etc. During 2003 to 2007, when India saw one of the strongest capex cycles, the market zoomed by more than 6 times. Sectoral indices such as banking, auto, metals, and capital goods rallied between 6 times to 23 times. The current economic scenario is quite similar to the one that existed in the early phase of the 2003 to 2007 rally. In the shorter term, we are betting on another quarter of strong earnings from India's top listed company, led by metal and mining, gas, banking and financial services, and insurance companies. Another major event to impact the market is the upcoming budget. Budget 2022 will come amid a raging wave, a third wave of coronavirus and economic recovery still weak. Economic recovery is expected to face headwinds while there is very little in the government's arsenal to provide stimulus. Fiscal deficit is already elevated and cannot be cranked up further. The high inflation and the current account deficit make it undesirable as well. The government is expected to target a steady reduction in the fiscal deficit target over the next financial year. The fiscal deficit target for financial year 23 is likely to be close to 6% of GDP against the 6.5 to 6.8% estimated in FY22. Reflecting the surge in business at the end of the quarter, bank credit rose sharply by 9.2% year on year by December 31st, 2022. According to RBI data, the year-on-year growth was 6.6% a year ago. The credit growth was 7.3% year-on-year till the previous fortnight ended 31st December. Banks lent almost 3.7 trillion in the 15-day period ended 31st December 2021, and outstanding commercial bank credit stood at 116.83 trillion as per RBI data. Bankers said the upturn in the economy is creating demand in the busy season that began in October 2021. There was also a rise in the use of credit limits by corporates and business at the end of the third quarter of the current financial year. However, to see if the rise is sustainable, it will be useful to see how credit activity happened in the fortnight of January 14, 2022. Usually, the credit's demand slumps in the new quarter after surge in the last fortnight of the previous quarter. Plus, surge in COVID-19 infection, including Omicron in the third wave, may make lenders cautious in the near term. In case of industrial production at 1.4% in November 2021, India recorded less than expected industry growth, with the chief contributions coming from primary goods and infrastructure. 5% of industry growth is expected in FY22 and acceleration thereafter as the capex cycle gathers momentum. While industrial growth was at a record high in March 2021, production levels have since come off. The monthly average industrial production in FY22 is still below the pre-pandemic levels. Global supply chain disruptions and logistics issues seem to be contributing. In December, with a strong pickup in manufacturing and construction, highway toll collections soared 16% month on month. Power consumption rose by 4.5% to 103 billion units in December. The resurgence of the pandemic, higher food and energy prices, and supply disruptions have kept India's inflationary pressures elevated. The wholesale price inflation rate remained in the double digits for the 9th consecutive month in December, while retail inflation shot up to a 5-month high of 5.6%. Talking about the US economy, it has been a rocky start to 2022 for US stock markets. Stocks fell sharply in the first week of the year as the Fed signaled a more aggressive approach to inflation, accompanied by a spike in interest rates. After a brief pause, the US Federal Reserve is again expanding its balance sheet, thus continuing to support asset prices. The US Central Bank has added nearly $31 billion to its balance sheet in the last 2 weeks. In December, the US Fed reduced its balance sheet twice in the first and last weeks of the month. The Fed action was accompanied by a sell-off in equity markets, including in India, and a decline in emerging market currencies. On Wednesday last week, the Consumer Price Index showed a jump of 7% year over year, the highest reading in 4 decades. Thursday's Producer Price Index report reflected a rise of 9.7% over the same period. However, these results were better than some investors feared, which helped in stabilizing the market. Retail sales were down 1.9% in December, a worse reading than the 0.1% drop expected by economists surveyed by Dow Jones. The US markets have closed in the negative on a weekly basis for 3 straight weeks now. Goldman Sachs economists predicted 4 rate hikes by the Federal Reserve this year, and Jamie Dimon, CEO and chairman of JP Morgan Chase, said he would be surprised if the central bank didn't go further. Chinese economy. China's exports grew slightly more than expected in December, while imports rose less than expected, according to customs data released last Friday. Exports rose by 20.9% year on year in US dollars terms, above the 20% increase forecast by a Reuters poll. Imports grew by 19.5% in US dollar terms, missing expectations of a 26.3% increase. According to Reuters, overall in 2021, total exports rose 29.9% compared to a 3.6% gain in 2020. Imports jumped 30.1% in 2021 after dropping 1% in 2020. While the rest of the world is also dealing with Omicron, China is different because of how intent authorities are on preventing any widespread outbreak by locking down cities and curbing travel. Additionally, the Chinese vaccine is said to be not as effective as the other vaccines available across the world. The country will be hosting the 2022 Winter Olympics in February, making the containment of Omicron important in the near term. Chinese President Xi Jinping is also widely expected to seek a historic third term in office when the Chinese Communist Party holds its 20th Party Congress in the second half of this year, underscoring the need for stability in the meantime. The strict approach has so far been effective. China has recorded far fewer COVID-19 cases than many other nations during the pandemic, and its economy was the only major one to grow in 2020. Omicron, though, threatens to expose some serious flaws in that plan. Economists say China's zero-tolerance strategy is likely to do more bad than good in 2022. China's economy grew by 8.1% in 2021 after an abrupt slowdown in the second half that is prompting suggestions that Beijing needs to shore up slumping growth. In the final 3 months of 2021, the world's second largest economy expanded at a 4% annual pace, government data showed on 17th January. That is down from the previous quarter's 4.9% and an eye-popping 18.3% in the first 3 months of 2021. Goldman Sachs, for example, has slashed its projection for Chinese economic growth in 2022 to 4.3% from 4.8%. other factors. If we take a look at what are the broader factors which are expected to impact the market in the ensuing period, then firstly, the 4 rate hikes expected from the US Federal Reserve and that the rupee might touch 77 against the dollar. Besides that, crude prices are likely to scale USD 120 level in the first half and then fall to an average of USD 85 a barrel, and that will be a recurring threat to a larger rally this year. Such short-term events may lead to intermittent market corrections throughout the year. Besides that, the upcoming state elections in 5 states of India, most importantly in UP, will also be a factor to watch out for. So what will be the main sectors to focus on in the new year? IT sector. IT industry contributes almost 8% to the GDP of the country. This year, it is expected that India will export more software than Saudi Arabia will export oil. Surging inflation, rising bond yields, and the threat of high borrowing costs have triggered selling in shares of global technology companies. The tech-heavy Nasdaq Composite Index has briefly fallen into correction territory, losing more than 10% from its recent peak. Indian IT stocks, as represented by the NSE Nifty IT Index, are showing no such concern. The Nifty IT Index has scaled a new high recently. Apart from the valuation, Indian IT companies differ from global tech stocks on various parameters, 2 of them being financial metrics and shareholder return policies. Contrary to high-flying global technology companies whose singular objective is growth and business acquisition, Indian IT is equally focused on cash flows and shareholder returns. In fact, the big 4 IT companies have articulated payout policies in recent years where they plan to return a large part of their free cash flows or net income to shareholders. TCS aims to return 80 to 100% of its free cash flow to shareholders. Infosys plans to return 85% of the free cash flow cumulatively over a 5-year period beginning from FY20 through a combination of dividends and share buybacks. Wipro expects to return 45 to 50% of its net income cumulatively on a block of 3 years from FY21. Last year, HCL Technologies announced a policy that entails investor payouts of not less than 75% of net income cumulatively over 5 years to FY26. Last fiscal year, TCS alone returned rupees 33,873 crores through dividend and share buybacks. Infosys paid 54% more dividends and conducted a large share buyback in FY21. Healthy payouts go a long way in rewarding and reassuring investors, especially when compared to cash-burning new age technology companies. The indications are that investors of major IT companies are in for another year of healthy payouts. Also, IT industry remains in the spotlight as increasing digitization has led to sustained strong demand. For the December quarter, a strong performance is expected, on track for multi-year growth. Short-term positive triggers include US Chairman of Federal Reserve Jerome Powell's expectations of strong growth in the US and consumption augurs well for IT exports. US contributes about 48 to 63% of the total business of the Indian IT majors. These are some of the stocks that you can see on the screen, which are the preferred picks from the IT sector. Metal sector. First, talking about aluminium. For Indian companies, the increase in prices brings back the possibility of higher realizations in the first half of 2022, but they also suffer from energy risks as they import coal from Indonesia and also because of domestic priority for thermal coal allocation to power generation plants. The power generation issue had worried investors in the December quarter. While there were fears that output could get affected, provisional production data for October and November don't reflect it. Vedanta's output numbers also showed good growth in aluminium. If aluminium prices remain up in the first half of the next financial year and output too holds up, then it will be a good start to the year for aluminium producers such as Hindalco and Vedanta. There is a question of higher coal prices eating into margins, but higher realization should cover up for that. The main risk is a dip in metal price realization.
Ipshu, jaldi ja.
The main risk is a dip in metal price realizations, which can then eat into margins due to higher cost of energy inputs. The government's thrust on infrastructure, talking about the steel industry, the government's thrust on infrastructure coupled with an increase in demand from the construction, engineering and other sectors is expected to push up domestic steel consumption in 2020-22. India's steel consumption numbers for calendar year 21 could be around 104 million tons, which would mean a 17% increase from last year. Till the year 2025, a total crude steel capacity of 25 million tons is likely to be added to the domestic market. Of it, 7 to 8 million tons would come in during FY22, while the remaining would take another 2 to 3 years to get commissioned. Steel companies are expecting an increase in offtake from the automobile segment in the January to March quarter after its muted show in the third quarter led by a weak festive demand and supply side issues. These are the top picks from the metal sector. Automobile sector. Sales of automobiles across all segments in India, the world's fifth largest market, hit a multi-year low in December quarter owing to pandemic-induced factors which disrupted both supply and demand. During the December quarter, passenger vehicle sales touched the lowest point in 5 years, two-wheelers the bottom in 9 years, commercial vehicles with the exception of 2020, the lowest level in 5 years, and three-wheelers the worst impacted, tanked to the lowest level in 13 years. Two-wheelers. Demand for two-wheelers continued to remain weak in both urban and rural pockets. Fear of the Omicron variant is only worsening the weak demand environment. Higher fuel prices are restricting the pace of recovery and consequently driving consumers' interest in e-scooters supported by subsidies. Inventory in the system is around 60 to 75 days as per the latest reports. Passenger vehicles. A sequential improvement in supplies from the OEMs was visible in December 21. CNG is preferred by buyers and increased penetration of CNG pump is acting as a catalyst. The waiting period remains 1 to 2 months for fast-selling models of major OEMs. Mahindra's XUV 700 commands a waiting period of 1 to 1.5 years for the most booked top-end versions. Inventory in the system is 15 to 20 days. Volumes are expected to remain flat year on year for Maruti, but grow 25% for Mahindra and 23% for Tata Motors passenger vehicle business. Commercial vehicles. The cargo sector is showing a sequential improvement due to increased freight availability. Infrastructure demand is led by spending due to government projects. There is a significant increase in CNG-powered ICV, that is intermediate commercial vehicles, and LCV, that is light commercial vehicle, for intra-city transportation, accounting for 50 to 70% of the total sales at present. Due to gaps in the CNG portfolio, Ashok Leyland is losing market share to Tata Motors and Eicher Motors, especially in the ICV segment. Fear of loss of sale due to the semiconductor shortage has led to a rise in inventory in the channel, which is slightly above 30 days. Tractors. Demand for tractors is weak in a seasonally weak period. Year-end discounts are unable to attract customers since the recent price hikes are playing spoilsport. Three-wheelers. Passenger three-wheelers are seeing a return of some stress due to the fear of the Omicron variant. Financing has eased a bit, however, it still remains constrained given the high NPAs during the recent lockdowns. Summing it up, while easing semiconductor supplies boost passenger vehicle retails, the two-wheeler segment is yet to recover amid the high cost of ownership. We would prefer four-wheelers over two-wheelers on the back of strong demand. Four-wheelers also offer a stable competitive environment. The momentum in the CV cycle is expected to continue. Companies with higher visibility in terms of a demand recovery, strong competitive positioning, margin drivers, and balance sheet strength are preferred in this sector. These are some of the stocks which are attractive at the current level in the automobile sector. Banking and financial sector. In the last month's rally, banking has been one of the biggest contributors. The Nifty Bank Index has gained 11.4% since December 20. Last week, it was up 1.67% to close at 38,370, especially after positive signals from initial numbers released by several banks. The gross non-performing asset, that is the GNPA ratio of scheduled commercial banks, declined to 7.3% in March 21 and further to 6.9% in September 21. With the consistent increase in provisioning, the net NPA ratio of the banks moderated to 2.4% in March 21 versus 2.8% in the year-ago period. The restructured book increased to 0.8% in March 21 and further to 1.8% in September 21, largely on account of the restructuring scheme for retail loans and MSMEs. The capital to risk weighted asset ratio of the bank strengthened to 16.3% in March 21 and further to 16.6% in September 21, aided by higher retained earnings, the recapitalization of PSBs by the government, and capital raises by both public and private sector banks. Growth in the balance sheets of the banks was driven by deposits and investment over 2020-21. Credit growth remained subdued while capital positions and profitability have improved. We expect the growth momentum to pick up as economic activity recovers. Along with the low cost of funds, this would support margins as even most of the operational and financial metrics continue to improve. These are some of the stocks in the banking and finance sector which are attractive. Capital goods. Capital goods stocks could be possibly at the cusp of one of the most rewarding long-term bull markets after remaining on the sidelines for almost 14 years. Some stocks have already started their up move, while many others are entering the new uptrend or making the first progress after their big base breakouts. Capital goods stock had a significant run in the 5-year period from 2001 to 2007, followed by a massive correction by March 2009. The BSE Capital Goods Index rallied a whopping 2,550% between 2001 to 2007. Since then, the sector got lost in a secular bear market. Over the long term, the national infrastructure pipeline will increase government expenditure towards railways, infrastructure, and road construction, which would also augur well for this sector. Most companies in the capital goods space have resolved their supply chain and labor issues after many COVID-19 related restrictions have been lifted. We expect the execution of all EPC and capital goods companies to improve year on year on strong order books and normalization of operations as compared to the third quarter of 2021. We expect EBITDA margin to be impacted by higher commodity prices on year basis. Larsen and Toubro's results would reflect improved execution. Core E&C and EBITDA margin is expected to improve on operating leverage and cost rationalization efforts. Order inflow for L&T has started recovering with several large-sized wins, and order flows are expected to ramp up further going ahead. Thermax is expected to see year-on-year improvement in sales on strong order backlog and Cummins to see double-digit growth in domestic revenues. Chip shortage and higher logistic cost may continue to have some impact on the third quarter results that are coming in on players such as Cummins and Carborundum Universal. Siemens margins are expected to be impacted by higher spend on new age technologies and the C&S Electric acquisition. Defense players would see improved execution across projects with BEL's revenue growth to be driven by ramp-up of execution in defense and non-defense orders. These are some of the preferred picks for the capital goods sector. Infrastructure sector. Third quarter results will reflect improved execution, incremental order inflows, and uptick in toll collection sequentially. Order inflow has remained strong for most players, resulting in strong order books. This gives healthy visibility on revenues. Dilip Bilcon's financials would reflect improved execution, and we expect revenues to grow by 9% year on year. IRB's EPC revenues will be adversely impacted due to a delay in getting date from the NHAI, which delayed commencement of construction on some projects. However, toll revenues for this company will improve for both the Mumbai-Pune and Ahmedabad-Vadodara projects. Ashoka Buildcon has excellent order inflow in the first 9 months of the year, and focus will be now on execution. KEC's revenues would be impacted by the National Green Tribunal ban on construction activities in NCR region and heavy rainfall in Chennai. Margins are expected to remain under pressure due to higher commodity prices and cost overrun at the SAE's tower projects. Kalpataru Power's revenues would reflect weak execution as order inflows remained weak during December quarter but have picked up considerably in the current quarter. These are the stocks in focus for this sector. Cement sector. With the onset of busy construction season, brokerages are optimistic of a demand price recovery in the domestic cement sector in the coming months. Though input prices have seen some moderation recently, a sustainable improvement in demand price is critical for the industry's profitability going ahead. In the second quarter, higher variable costs affected the profitability of the domestic cement players, leading to an 11% year-on-year drop and a 17% sequential fall in the EBITDA per ton. In the third quarter of the current fiscal, cement volumes are likely to have declined in mid-single digit year-on-year during October to November due to extended monsoon in many parts of the country and sharp decline in east volumes. Amid a strong demand outlook, capacities and existing utilization levels of the domestic cement industry will be on a rise in the coming years. Given the strong demand outlook of 9% CAGR over the next 2 years and limited supply growth of about 13% over the same period, utilizations will continue to rise going ahead. Nearly 60% of the 42 million ton clinker and 80 million ton cement capacities are planned to be added in the high growth markets of east and central regions of the country over the next 2 years. Around 30% of these capacities are expected by the end of FY23, and another 30% of the capacities are expected to get commissioned by FY24. Small cement companies will also play a strong role in upping volumes for the industry in the coming months. Small players are invariably more cost efficient in operations, and reducing realization gap as against large peers has helped them to significantly narrow their EBITDA per ton gap to rupees 300 to rupees 350 from about 450 a few years ago. Also, a stronger expansion pipeline of 27% of capacity as against 14% for large peers is expected to drive growth and market share gains in the medium term while reducing regional concentration risk. Among the large caps, Ultratech Cement is expected to continue to post industry-leading growth and profitability over the next 3 years, backed by low-cost brownfield expansions and increased cost efficiencies. The companies plan to add 20 million ton capacities over the next 2 to 3 years in high-growth markets of East, Central, and North, would likely ensure faster ramp-up and higher volume growth. These are some of the stocks which are preferred in the cement sector. Consumer durables. Flat to high single-digit growth on a year-on-year basis is expected for consumer durable companies. Consumer durable companies benefited in the past year from pent-up demand, which has been largely non-existent this year. Divergent trends can be seen within white goods, with premium categories likely to see high growth and non-premium segments likely to report moderate growth, primarily led by price hikes. Voltas and Whirlpool are expected to have a weak quarter with pressure on volumes. Electrical wires and switchgear segment will see improved performance led by pickup in real estate construction, while cables and wire may continue to remain under pressure due to volatile copper prices. Lighting products are expected to register mid-single-digit growth. Companies have been taking price hikes across segments in a phased manner, and it is gradually getting accepted by the customers. However, these price hikes will only partially offset the higher commodity prices, and continued discounts will lead to margin pressures. New age technologies will continue to define consumer durables. Artificial intelligence, Internet of Things, and robotics are already being used to develop value proposition appliances that are smart, convenient, and safe to use. These are some of the top picks in the consumer durable sector. Consumer staples. Recovery in discretionary consumption categories and continued sequential moderation in health and hygiene and in-home consumption categories is expected. Signs of weakness in rural demand trends are seen, and it is expected that discretionary pack will outperform staples. Continued strong growth in paints companies will be led by share gains from smaller players and good construction-led demand, despite some drag from unseasonal rains. Jewelry retail should see strong underlying revenue momentum aided by share gains. Alcohol beverages companies should see continued recovery with on-trade channel normalization and wedding functions-led demand uptick. Pressures continue to weigh on profitability across most staples and discretionary companies. In staples, Tata Consumer and Marico are expected to lead the pack with 14 to 15% two-year revenue CAGR, followed by Dabur, HUL, GCPL, and Nestle. Paint adhesive companies are expected to register double-digit two-year revenue CAGR led by Asian Paints, Berger Paints, Pidilite Industries. Kansai Nerolac is expected to lag behind in these terms. Companies are expected to use advertising and promotion spends to defend margin partially, notwithstanding signs of rural demand weakness. EBITDA growth and PAT growth would be soft for most companies given the headwinds. These are some of the preferred picks for the consumer staple sector. Textile sector. Shares of textile companies have bucked the volatile market trend and managed to rally as improving exports of cotton and made-up apparel along with attractive valuation and earning growth visibility give bullish signals on this sector. The COVID-19 pandemic has altered the global textile and apparel supply chain with several brands preferring more than one sourcing destination. Further, the US-China trade war and imposition of additional duties on Chinese textile and apparel imports have forced US-based importers to scout other destinations such as India. In December, the US signed into law a legislation that bans imports from China's Xinjiang region over concerns about forced labor. As Xinjiang constitutes nearly 20% of the global cotton market, the supply readjustment on account of this ban has led to more demand for Indian cotton and cotton yarn. Cotton and cotton yarn exports from India have surged at a 34% CAGR between April and October from FY19 to 21. The US markets accounts for 15% of global textile and apparels imports. Countries such as China, Bangladesh, Vietnam, and Cambodia have become reliant on India for their cotton requirements after the ban. And Indian cotton exports have skyrocketed in the past 8 months as a result. These are some of the textile companies which should be kept in focus. Fertilizers and agrochemical sector. Sentiments for Rabi season this year are positive, led by high soil moisture content, commodity prices, and reservoir water levels. We expect domestic agrochemical companies to report single-digit revenue growth over a strong base of the past year, primarily led by price hikes, while volumes will largely remain stable. Companies are likely to see margin pressure as the price hikes taken may not be completely sufficient to offset increased input prices. Most of the domestic players are dependent on China for raw materials and are thus facing supply disruption. PI Industries and Bayer Crop Science are expected to perform slightly better as we expect their newly launched pyrosulfoxane to gain traction. UPL is expected to gain market share across regions as many of its global competitors are dependent on China for raw material supply, while UPL benefits from its backward integration and large distribution network across the globe. Margins are likely to remain under pressure given the sharp spike in raw material prices, only partially offset by price hikes. These are some of the top picks in this sector. Hospitality sector. Because of the third wave, the hospitality sector, which was limping back to normalcy, has again received a kick, and the impact of the same will be seen on the quarterly numbers. However, at the current low prices, one can take benefit and invest in stocks such as Mahindra Holidays and Indian Hotels, both companies with a strong lineage and a good long-term expectations. On the other hand, restaurant shares are not that attractive. but brands which focus on takeaways like Devyani International with the Pizza Hut is attractive. Burger King was issued at a very high level and hence is expected to correct. But the master of them all is Zomato. Order from anywhere and Zomato will benefit. And ordering in is going to be the trend at least for a few more months. Oil and gas sector. Due to global refinery closures, conversions to logistic terminals biofuels and delays in upcoming capacities due to the COVID-19 outbreak, the global refinery utilization rate is expected to rise over the next few years. Oil marketing companies have used the cut in excise and VAT to raise their marketing margins on auto fuels by rupees 3.5 to 6.1 per litre in the second half of the current financial year, despite surge in oil prices. The sharp underperformance of OMCs since the outbreak of COVID-19 has been due to concerns on marketing margins amid rising oil prices, uncertainty on throughput sales, and suppressed refining margins. As the world moves away from lockdowns for handling the pandemic, sustained rise of GRM of USD 6.1 in the second half of the year is expected. Oil and gas producers such as ONGC and Indian Oil Corporation are likely to shine with high double-digit growth in earnings thanks to higher crude oil prices on a year-on-year basis. The oil and gas companies' combined net profit is expected to grow 53.5% year-on-year in the third quarter, accounting for 40.2% of the combined earnings of all the Nifty 50 companies in the third quarter. These are the top picks for this sector. Power sector. The power sector clocked several all-time highs in 2021, some of which are peak daily demand crossed 200 gigawatts in July 2021. Solar capacity was enhanced by a record 8.5 gigawatts in the 8 months of the current financial year. Power demand increased by 10.4% year-on-year during the first 8 months of the year. All India coal offtake was up by 22% year-on-year during the first 9 months of the year. As many as 1.1 million smart meters were installed to take the cumulative meter installations to 3.5 million. These record highs in 2021 have set the stage for the power sector to scale newer peaks in 2020-22. Rise in power demand will continue to be the key driver. While conventional power generation and consequently coal demand is expected to remain robust, installed capacity addition will be driven by solar. Action in the renewable energy space is expected to pick up soon, with basic customs duty on import of solar cells and modules to be a key factor. A recent solar tender was oversubscribed by more than 3 times, indicating the huge appetite and competition in the renewable energy space. Regulations and policies to improve these sector dynamics are expected to pick up pace in the coming months. These are few of the stocks which are in focus in this sector. Here, I would like to point out that this list by itself is in no way exhaustive, and there are other sectors like sugar, real estate, and insurance, which are also attractive. But due to time constraint, it is not possible to go into detail about all the sectors. I would like to say thank you and end this on the note that the next time, hopefully, we will meet in person and not over a webinar. Thank you.
Thank you, JAINEE.
Thank
For
you.
the wonderful detailed sectorial presentation. I'm sure everybody would be happy. Now we can start with the question answer session. Pranav? Pranav, audio નથી આવતો.
Hello. Yes.
Yes, you are clear.
Yes. You can write your questions in the chat box. I would take them one by one, or you can raise your hand and ask your question. Let me start then. What's your view on pharma sector?
Sorry, am I audible?
Yes,
Yes.
you are audible.
ફાર્મા સેક્ટરમાં અત્યારે વાત કરીએ તો સ્ટોક સ્પેસિફિક જ અત્યારે અટ્રેક્શન છે. પહેલું આપણે વાત કરીએ તો સન ફાર્મા અત્યારના લેવલ પર અટ્રેક્ટિવ છે. ટોરન્ટ ફાર્મા ઇઝ અટ્રેક્ટિવ. અગેન કેડિલા ઇઝ એટ વેરી લો લેવલ અને હજી એમાં થોડું કરેક્શન એક્સપેક્ટેડ છે આગળ જતા. સિપ્લા ઇઝ ઓલ્સો સ્લો મુવમેન્ટમાં છે, એટલે તરત અપટ્રેન્ડ નહીં દેખાડે. લોંગ ટર્મ માટે લેવું હોય તો અત્યારે લઈ શકાય છે.
Okay. Overall 2022 pharma થોડું એવરેજ બિલો એવરેજ પરફોર્મન્સ છે.
યસ યસ.
ઓકે.
લઈ લીધી. આ ડેવલપમેન્ટ એ પણ લઈ લીધું. લઈ લીધું.
બીજા કોઈને કોઈ ક્વેશ્ચન? હા, નીતિનભાઈ દેસાઈ પૂછે છે બર્જર પેઇન્ટ અને સેરામાં આપનો વ્યૂ.
As we said, Berger paints, again, paints and adhesives માં ખાસું attractive દેખાય છે. The top level companies, obviously Asian Paints પણ Berger Paints second level પર ઘણું attractive દેખાય છે, કારણ કે આગળ જતા real estate sector is going to do really well. એટલે plus infrastructure is also going to do well. અને બજેટ ખાસ કરીને આ બધા સેક્ટર્સ માટે ખાસું પોઝિટિવ રહે એવા એક્સપેક્ટેશન છે. એટલે Berger Paints is expected to do well. Same is the case with Sera Sanitary, કારણ કે તમે real estate pick up થાય એટલે it is very obvious that their products are also going to pick up in the coming days.
ઓકે. વોટ અબાઉટ ટાટા પાવર? નિમેશભાઈ પૂછે છે.
હા, power sectorમાં as I highlighted in the presentation, Tata Power is one of the top picks in this sector. અને long term માટે બી ટાટા ગ્રુપમાંથી વાત કરીએ તો Tata Power and Tata Consumer are two stocks which are expected to do well.
ઓકે, થેન્ક યુ.
ટાટા સ્ટીલની શું વાત છે? ટાટા સ્ટીલ
ટાટા સ્ટીલ ઘણો બધો ચાલી ગયો છે. આપણે થોડા ગયા વર્ષમાં જોયું, પણ હજી બી ઇટ ઇઝ નોટ ધ એન્ડ ઓફ ધ રોડ. એટલે હજી બી સ્ટીલ સેક્ટર આવતા 1-2 વર્ષમાં તો ખાસું સારું પરફોર્મન્સ આપે એવી એક્સપેક્ટેશન છે, એવા એક્સપેક્ટેશન છે. એટલે હજી બી ટાટા સ્ટીલ ઇઝ ઓલ્સો વેરી અટ્રેક્ટિવ.
ઓકે. સિદ્ધાર્થભાઈ પૂછે છે વ્યૂઝ ઓન ટેક્સટાઇલ, કેમિકલ, ઇલેક્ટ્રિક વેહિકલ સ્પેસ, ઓલ્સો ઓન ડિફેન્સ સેક્ટર. પહેલા ટેક્સટાઇલ, કેમિકલ અને ઇલેક્ટ્રિક વેહિકલ ઉપર આપના થોટ્સ.
ઇલેક્ટ્રિક વ્હીકલમાં લિસ્ટેડ કંપનીઝમાં જો વાત કરીએ તો વન ઇઝ ટાટા મોટર્સ હુ હેઝ સ્ટાર્ટેડ. એટલે ટાટા મોટર્સના આપણે ઓલરેડી નેક્સન ને બધું જોઈએ છે કે વિચ આર કમિંગ ઇન ઇલેક્ટ્રિક કાર્સ એન્ડ ઓલ ધેટ. સો ટાટા મોટર્સ ઇઝ વન પિક. અનધર ઇઝ ટીવીએસ, પણ ટીવીએસમાં હજી એટલું બધું પ્રોગ્રેસ એ લોકોએ ઇલેક્ટ્રિક વ્હીકલ્સમાં કર્યું નથી ઇન ધ ટુ વ્હીલર. સો ટીવીએસ ઓન ધ હોલ ઇઝ નોટ ધેટ ગ્રેટ એટ ધીસ પોઈન્ટ ઓફ ટાઈમ. ટેક્સટાઇલ્સમાં વાત કરીએ તો જેમ એઝ આઈ સેડ કે ટેક્સટાઇલ્સ બહુ જ આવતા દિવસોમાં બહુ સરસ પરફોર્મન્સ આપે એવા એક્સપેક્ટેશન છે. સો ધ ટ્રાઇડન્ટ આપણે જોયું કે ઘણા દિવસોથી બહુ સરસ રિટર્ન્સ આપી રહ્યું છે. વર્ધમાન ટેક્સટાઇલ ઇઝ ડુઈંગ વેલ. ઇન ધ કમિંગ ડેઝ ગોકળદાસ એક્સપોર્ટ્સ ઇઝ એક્સપેક્ટેડ ટુ ડુ વેલ. બીજા કયો સેક્ટર કીધું?
ડિફેન્સ સેક્ટર.
ડિફેન્સ સેક્ટરમાં BEL ઇઝ એક્સપેક્ટેડ ટુ ડુ વેલ.
જગદીશભાઈ પૂછે છે જેબી કેમિકલ ફાર્મા ઉપર કોઈ પર્ટિક્યુલર વ્યૂ.
નોટ એટ પ્રેઝન્ટ. અત્યારે હું એ જ નથી ટ્રેક કરતી.
ઓકે. નિમેશભાઈ પૂછે છે હાઉ વિલ ક્રૂડ અફેક્ટ સ્ટોક માર્કેટ ધીસ યર? ક્રૂડ પ્રાઇસીસ અત્યારે ઉપર જઈ રહ્યા છે તો
હા, ક્રૂડ પ્રાઇસીસ હજી તો ઉપર જવાના ચાલુ થઈ રહ્યા છે, હજી બહુ ઓછા ઉપર ગયા છે, અત્યારે અરાઉન્ડ $87 છે. અગેન દેર ઇઝ પ્રોબ્લેમ્સ ગોઈંગ ઓન. એક બે દિવસમાં છેલ્લા 2 અટેક્સ થયા હતા ગલ્ફ રિજનમાં, એટલે ડ્યુરિંગ ધ યર ઇટ ઇઝ એક્સપેક્ટેડ ટુ ગો અપ ટુ $120. સો ઇટ ઇઝ એક્સપેક્ટેડ ટુ ક્રિએટ અ પ્રોબ્લેમ્સ ફોર ધ માર્કેટ્સ. એટલે જે મેજર કન્સ્ટેન્ટ છે માર્કેટ રેલીને, વન ઓફ ધેમ ઇઝ ક્રૂડ. બટ in the second half of the next year, it is again expected to come down to around 85 levels. એટલે ત્યાં સુધીમાં થોડુંક સેટલ ડાઉન થાય એવા એક્સપેક્ટેશન છે.
અદાની ગ્રુપ સ્ટોક્સ ઉપર આપના વ્યૂ જણાવશો?
હા, અદાણીમાં અત્યારે મેઇન અદાણી એન્ટરપ્રાઇઝ ઇઝ અટ્રેક્ટિવ, પોર્ટ્સ ઇઝ અટ્રેક્ટિવ, અદાણી ગ્રીન ઇઝ અટ્રેક્ટિવ. અગેન પાવર સેક્ટરમાં અદાણી ટ્રાન્સમિશન ઇઝ અટ્રેક્ટિવ. સો ધીઝ આર ધ 4 સ્ટોક્સ અદાણી ગ્રુપના વિચ આર અટ્રેક્ટિવ.
ઓકે.
ઇન્સ્યોરન્સ સેક્ટરમાં શું લાગે છે?
ઇન્સ્યોરન્સ સેક્ટરમાં LIC નો IPO આવવાનો છે, એટલે ત્યાં સુધી SBI લાઈફમાં એકદમ જ સરસ અપટ્રેન્ડ ચાલે તેવા એક્સપેક્ટેશન છે. પ્લસ ICICI Pru Life is another share which is attractive in this space.
પ્રણવભાઈ,
હાજી.
એક મિનિટ. જૈનીબેન, 2 ક્વિક ક્વેશ્ચન. એક ઈવી ની વાત થઈ, તો ઈવીમાં હજુ કેટલું હોરાઇઝન ટાઈમ વાઇઝ હોવું જોઈએ? કોઈ ઇન્વેસ્ટમેન્ટ કોઈ કંપનીમાં કરો તો હજુ ઈવી ફોર ઇન્ડિયા ઇઝ અ લોંગ વે ટુ ગો.
No, it is a very long way to go, but prices are always news driven. So તમે કોઈ બી પોઝિટિવ, એટલે ઇન રિયાલિટી ઇમ્પ્લિમેન્ટેશન થતા ઘણો લાંબો ટાઈમ થશે, પણ ધારો કે કઈ ન્યૂઝ આયા કે કોઈ ગવર્મેન્ટ ઇઝ પ્લાનિંગ ફોર સમ પોઝિટિવ પોલિસી, તો ઇટ વિલ સ્ટાર્ટ ઇમ્પેક્ટિંગ ધ સ્ટોક પ્રાઇસીસ ઓફ ધ માર્કેટ ઓફ ધ કંપનીઝ who are already into EV space because they have the first mover advantage rather than companies which have not yet ventured into that segment.
અને બીજું કે કેડિલા, ઝાયડસ કેડિલા, દેટ ઇઝ કે હેલ્થ કેર, એ કેમ વધીને પડી રહ્યો છે ને નથી ચાલતો? બીકોઝ ઓફ
અત્યારે ઓવરઓલ ફાર્મા સેક્ટર જ એટલું અટ્રેક્ટિવ નથી. કેડિલા હેલ્થ કેરમાં હજી અઠવાડિયું 10 દિવસ બીજા કરેક્શન આવે એવું લાગે છે.
ડાઉનવર્ડ.
હા, હજી ડાઉનવર્ડ બીજું અઠવાડિયું 10 દિવસ થાય એવું લાગે.
પણ એના બોરોઈંગ્સ છે અને જોઈએ એટલો ગ્રોથ નથી બીજી કંપનીઓ જેટલો, ધો દે આર વેરી બિગ એન્ડ ઇનોવેટિવ.
યસ, બટ એટલે ઇવન ઇન સ્પાઇટ ઓફ કે તેમના COVID-19 વેક્સિન્સ ને અપ્રુવલ મળે છે, પછી પાછું બેકફૂટ પર જાય છે, એટલે એના લીધે થોડીક ઓછી ક્લેરિટી છે.
કારણ કે એઝ યુ સેડ ટોરન્ટ ને બધા ચાલી રહ્યા છે.
હા, ટોરન્ટ ની અત્યારે બંને કંપની સરસ છે. ટોરન્ટ પાવર એન્ડ ફાર્મા બોથ આર ઇન ગુડ અપટ્રેન્ડ એઝ ઓફ નાઉ.
અને અદાણી પોર્ટ કેમ હાલતો નથી? ઇટ્સ વન ઓફ ધ સ્ટ્રોંગેસ્ટ કંપનીઝ તમે જુઓ તો.
પણ અદાણી ગ્રુપના બધા સાયક્લિકલ પેલામાં ચાલી રહ્યા છે, એટલે અત્યારે એન્ટરપ્રાઇઝ ઓવરઓલ પોર્ટ લોંગ ટર્મ માટે તો સારું જ છે, કારણ કે ઇન્ફ્રાસ્ટ્રક્ચર, ધારો કે બજેટમાં જે આવશે એમાં પોર્ટ માટેના આવશે જ અનાઉન્સમેન્ટ્સ, નવા પોર્ટના કે જે બી ડેવલપમેન્ટના, એટલે એ વખતે અગેન અદાણી પોર્ટ વિલ કમ ઇન ટુ ફોકસ. બટ ધ થિંગ ઇઝ કે અત્યારે અદાણી એન્ટરપ્રાઇઝ અને અદાણી ટ્રાન્સમિશન, એન્ડ ધીઝ આર ધ 2 stocks which are in focus in this group.
થેન્ક યુ.
મુકેશભાઈ પૂછે છે ગોદરેજ એગ્રો, એટલે આઈ થિંક ગોદરેજ
Agrovate.
એગ્રોની વાત કરે છે. હાજી, તો એમાં કોઈ વ્યૂ?
Godrej Agrovate company fundamentals are very good. So for a long-term position, you can take a buy in that company. But short-term માં હજી એટલે એકદમ જ uptrend નહીં આવી જાય.
ઓકે. નિમેશભાઈ પૂછે છે માર્કેટ એક્સપેન્સિવ લાગે છે તમને અત્યારે આ વેલ્યુએશન ઉપર?
હજી અત્યારના લેવલથી માર્કેટ ઘણું વોલેટાઇલ રહેશે અપ ટીલ ધ બજેટ, ધેટ ઇઝ વોટ ઇઝ એક્સપેક્ટેડ. એન્ડ ફર્ધર એટલે એક સાઈડ છે કે અર્નિંગ્સ ઘણા સારા આવી રહ્યા છે કંપનીઝના, સ્ટીલ સમ મેજર કંપનીઝના રિપોર્ટ્સ આર પેન્ડિંગ. સો ધેટ વિલ ઓલ્સો ઇમ્પેક્ટ ધ માર્કેટ મૂવમેન્ટ. બટ પોસ્ટ ધ બજેટ, હાઉ ધ બજેટ ટર્ન્સ આઉટ ટુ બી, અને જનરલી એવું જોવા મળ્યું છે કે બજેટ પછી માર્કેટ કરેક્ટ થતું હોય છે.
Hello?
એટલે because budget is never able to fulfill market expectations most of the time. So
Hello?
it is expected કે બજેટ પછી થોડું કરેક્શન આવે.
હેલો,
ઓકે,
અતુલ લિમિટેડ વિશે શું આપનો અભિપ્રાય છે અત્યારે?
Again,
Atul
Atul
Limited.
fundamentals, yes, fundamentals are very strong. So અને કામગીરી બી સરસ છે એટલે લોંગ ટર્મ માટે it is a good buy.
કારણ કે ગઈકાલે એવું થયું કે 10,856 ટોપ લેવલ બતાવીને સીધો 10,000 આવી ગયો પાછો ભાવ વધે એમ એટલે
હા, એટલે શોર્ટ ટર્મમાં હમણાં એટલું બધું અટ્રેક્ટિવ નથી, પણ તમે લાંબુ પકડવાનું પેલું હોય તો ઇટ ઇઝ અટ્રેક્ટિવ.
વેચાય કે ના વેચાય એમ શેર?
ના, હમણાં વેચી નાખવાનું એવું નથી લાગતું.
અચ્છા, ઓકે, થેન્ક યુ.
Thank you.
રિયલ
મુકેશભાઈ
એસ્ટેટમાં
પૂછે
ઇન્વેસ્ટમેન્ટ થાય અત્યારે?
Real estate is one of the most attractive sectors as of now for the coming year. અને આમાં main attraction would be Shobha Developers, DLF, Oberoi Realty, Godrej Properties. These are the four main.
લાસ્ટ 6 મંથ્સમાં કયા આઈપીઓ સારા રહ્યા, એટલે કરેક્શન આવ્યું હોય અને અત્યારે એન્ટર થવાય એવું કોઈ લાસ્ટ 6 મંથ્સમાં આઈપીઓ?
IPO માં વાત કરીએ તો one of the major picks, two major picks would be Zomato and Paytm, because these are both new age technology companies which are expected to do well કારણ કે business are strong અને સારા valuation પર આપ્યા છે. એટલે these are the two companies which I would pick from the last few months.
બજેટમાં તમને શું લાગે છે અને ઇન્કમ ટેક્સ સ્લેબમાં કઈ ચેન્જીસ આવશે એવું રાજેન્દ્રભાઈ પૂછે છે.
ના, ઇન્કમ ટેક્સ લેવલ ને પર્સનલ ટેક્સ લેવલ પર બહુ કોઈ ચેન્જીસ આવે એવું લાગતું નથી.
ઓકે,
Budget will be more focused on infrastructure, is what is we are expecting.
સિદ્ધાર્થભાઈ પૂછે છે કેડિલા વેક્સિન પ્રોજેક્ટ ફેલ્ડ, હવે એવું તો કોઈને ખબર નથી.
There is no clarity.
યસ. પ્રાઇવેટ બેંક કે પીએસયુ બેંકમાં શું પ્રિફર કરશો, નિમેશભાઈ પૂછે છે.
પ્રાઇવેટ બેંક્સમાં અત્યારે would prefer ICICI Bank topmostમાં, એની પછી HDFC Bank. Public sector banks are not as attractive as private sector banks. So first priority would be private sector banks. Public sector banks, if you are opting for that, then SBI is a good option. Bank of Baroda is a good option. Canara Bank is again a good option.
Okay. Real estate stocks, I think you already mentioned some names. So,
Yeah, I mentioned DLF, Shobha Realty, Oberoi, Godrej Properties.
okay.
These are the first ones.
What about your view on Mazagon Docks?
I don't track that on a
PSU, I think
regular
list
basis.
30. हाँ.
हाँ.
Yes. Okay, okay. Make Money group stocks, લલિતભાઈ પૂછે છે. Make Money ઉપર કોઈ
Not
idea?
એટલે કઈ બહુ એમાં movement અત્યારે નથી expected.
Okay. અને HDFC Life?
HDFC Life is a good bet for the long term. Again, LIC નો IPO આવશે એટલે બધા જ insurance stocks will again come into focus. એટલે એ વખતે ફરી થોડું movement દેખાય. પણ short term માં HDFC Life કરતા SBI Life will move faster.
Okay.
હેલો, TCS બાયબેકમાં આપવા જોઈએ કે ના આપવા જોઈએ?
TCS buyback નું અમે ચાણક્યમાં આ વખતે જ ડિટેલ આપ્યું છે એનાલિસિસ which says that તમે ગયા 2 કે 3 વખતના બાયબેક નું સ્ટડી કરો તો one of them investors were able to earn, but બીજા 2 વખત એવું થયું હતું કે તમે લગભગ જ્યારે બાયબેક નો ટાઈમ પતે ત્યાં સુધીમાં માર્કેટ શેર was equal to the buyback price, so then it did not make sense. So I think this time also buyback પતશે, જે લગભગ 3 મહિનાનું ડ્યુરેશન હોય છે બાયબેક પતવામાં, તો ત્યાં સુધીમાં માર્કેટ પ્રાઇસ will almost be equal to that price.
એટલે 45 થઈ જશે એમ તમારે?
45 આસપાસ થઈ જશે. યા,
થઈ જશે. ઓકે, થેન્ક યુ. બાયબેક અપાય નહીં ટૂંકમાં?
ના,
રાખી હોલ્ડ કરી રાખવાના?
હા, હોલ્ડ કરી રાખવાનું.
ઓકે, થેન્ક યુ.
Thank you.
નિમેશભાઈ પૂછે છે કે આ વર્ષે માર્કેટમાં એસઆઈપી થોડા લેવા જોઈએ કે વન ટાઈમ ઇન્વેસ્ટમેન્ટ કરી દેવાય અત્યારે કરવું હોય તો?
SIP is always a better option compared to a one-time option, whether you are doing mutual funds or you are buying shares, because તમારું risk એ રીતે તમે ઓછું કરી શકો છો.
Best in technology shares, I think you already covered that part. IT shares,
IT shares would be the four major. Wipro અત્યારે નથી attractive. એ સિવાય TCS, Tech Mahindra and Infosys. Infosys and TCS at the top. After that, Tech Mahindra.
silver ETF કોઈને કરવું હોય તો?
Silver ETF હમણાં જ એક fund of funds, I don't remember the name, but હમણાં જ એક launch થયું, which was very, I think it was from Kotak. Silver ETF is a very good option.
ઓકે. રાઈસ સ્ટોક્સ?
Price stocks માં KRB ને એ બધા છે, પણ not much movement is expected in that.
ઓકે. ઓકે, આઈ થિંક આઈ કવર્ડ ઓલમોસ્ટ એવરીથિંગ. બીજા કોઈને કોઈ ક્વેશ્ચન હોય તો ડાયરેક્ટલી પૂછી શકો છો. ગોલ્ડ ઉપર તમારો વ્યૂ?
Gold is expected to be very volatile depending upon US Federal Reserve નું શું કેવા rate hikes આવે છે ત્યાં, US economy કેવી રીતે movement કરે છે એના પ્રમાણે ખાસું volatility આવશે.
Okay. Samirભાઈ, I think we have covered almost every question. હવે બીજું કોઈ બાકી તો નથી. Thank you કહે છે બધા.
Thank you, JAINEE, on behalf of all our members. What was
Thank
the
you so
final
much.
count, Pranavbhai?
It around 40, 39 તો મેં જોયા હતા, પછી 40 ઉપર ગયા હોય તો I missed.
Good.
may have missed.
We hit a high number compared to last 4 months.
Yes.
Okay.
Thank you, JAINEE, courtesy to your name. To
Hello.
your
Thank you so much for
સમીરભાઈ
inviting.
એક વસ્તુ, પેલું ઝૂમમાંથી આમાં વેબએક્સમાં કેમ લઈ ગયા તમે?
આજે આપણે સેબી જોડે કર્યો છે પ્રોગ્રામ.
Yes.
અચ્છા, એટલે
ક્વાર્ટરલી 1 થી 2 પ્રોગ્રામ કમ્પલસરી કરવા પડે, એટલે એમનું પ્લેટફોર્મ વાપરવું પડ્યું છે. એન્ડ વી થેન્ક સેબી ઓલ્સો ફોર ધ સેમ. એન્ડ
ઝૂમમાં બહુ ઇઝીલી એન્ટર થવાતું, તો આમાં થોડી બહુ વાર લાગી એન્ટર થતા.
થોડી તકલીફ, હવે બીજી વાર તે પડી ગઈ એટલે વાતો નહીં આવે.
હવે વાંધો નહીં આવે. આ તો બહુ તકલીફ પડી મને પોતાને. આપણે નવા નિશાળિયા બધા કહેવાઈએ ને એટલે.
આ બરાબર, મને પોતાને પડી એટલે 4-5 મિનિટ મારે મોડું થયું હતું.
હા, બસ સાચી વાત છે.
લિંક જોઈને મને એમ જ હતું કે સીધું જતું રહેવાશે, પણ ઇન્સ્ટોલ કર્યું એને. એનીવે, થેન્ક યુ.
થેન્ક યુ વેરી મચ.
થેન્ક યુ.
Thank you everyone.
Thank you, everybody.
Yes.